Yeah, the other one that shocked me is last time you and I caught up was at the beginning of our Dubai trip, and then I was shocked because I went to see some of the sovereigns and stuff, and like, okay, this is like there are two mandates in the entire region. One is AI, and the other is crypto. At every scale, from building economies on it to driving licenses to everything, payments to investing in it via the sovereigns. I was like, wow, okay, this is not what I expected, because that was a big shift as well that kind of happened this year.
Hey guys, welcome to Everyday Finance, a moment in which technological and financial forces accelerate beyond the pace of the legacy system is what Raoul Pal refers to as the exponential age. He warns that we are about to enter this age right now. The old economy, which was founded on debt-fueled expansion and rising populations, is crumbling under its own contradictions, according to his argument for the economy. The traditional assets that are related to this system are experiencing stagnation, which offers very few opportunities for the production of genuine wealth. In the meantime, a parallel economy is beginning to emerge. Artificial intelligence, AI, and blockchain are not merely new tools. Rather, they are technologies that are compounding, feeding on network effects that scale faster than anything that civilization has ever seen. By working together, they constitute the foundation of an unstoppable tide of technological and financial advancement. This momentum, according to Powell, is preparing the groundwork for the last great bull markets that we will ever see in our lifetime. Those that detect this divergence early on and position themselves inside the realms of crypto and AI have the potential to amass wealth that will be passed down from generation to generation as the gap between the old and the new continues to expand irreversibly. Those who choose to ignore it or hesitate run the risk of being left behind and excluded from the economy of the future.
Yeah, generally people only see today, and really the game is seeing where we're going to go, because that's what you've got to build towards. You say, okay, right, we've won the big battle, which was like, okay, the game is on, we can start tokenizing stuff, and everyone can start investing in this stuff. Okay, great. But then what's the knock-on effect, and where's the really big opportunity from that? And that's why I start thinking about, well, we're going to create a shit ton of wealth. So wealth management in a more integrated format that is more digitally native.
I think you might have some ideas on what to do with that wealth, right?
Yeah, exactly. Got plenty of ideas. Digital art might be one of them. And then the other side is, okay, if tokenization, real world assets is a big thing, people think, great, let's bring equities on chain. Great. And I've been, you and I have talked about that a lot. Robinhood are now doing it. Kraken are doing it. It's going to be the big thing, right? All assets are coming under the same pool on these rails. But then after that, it's like, okay, well, what else does this technology allow us to do that's never been done before? And it's a lot of stuff. What we think of as the kind of derivative markets and the hybrid markets that we grew up in, we don't think that smart contracts can be that. They can be anything.
Wow. Another big thought to sort of chew on.
Yeah, I just think there's a wholesale change in what happens. So how are you going to crack the international side? I know you're building an Indian business now, which is brave because India's been stop, go, but obviously one of the biggest opportunities in the world, and pretty crypto native population as well.
I'm not involved as directly in the India part of things. I'm more involved in what you'd see the classic sort of international financial centers. I mean, my focus right now is really in the post-announcement, pre-close, Deribit and UAE, and thinking about that as a hub to service the rest of the world. I'm thinking about our MiCA license.
How is Europe for you as a somebody building businesses and operating with different regulatory jurisdictions and different levels of reticence or acceptance? Where is Europe for you guys, and the UK as well?
Yeah, the UK and Europe together are a big percentage of our business. So if you remember back to the US being probably the biggest market from our former lives, and then Europe being kind of 30-35%, sometimes more, sometimes less. That's really super important. And having the ability to passport across the 27 member nations there, plus the UK and Switzerland, is really important. So I kind of feel like the Europe at times was ahead, but now is behind. And so I kind of see Europe and the formation of capital, the deployment of capital, and post MiCA, we got to be compliant with MiFID as well. It's coming now, and so for us, we're not going to take we're going to be regulated here, but unregulated and outside the rules over there. We're going to be regulated in all the proper places. And the cost of doing that is significant, but we achieved our MiCA milestone about probably 3 months earlier than I think we thought it might take. And so that's an important part for us. When Europe, we post-financial crisis, we went through the same thing. They established these sort of Mount Everest of compliance regulations. So it creates a real difficult bunch of things, criteria to meet to be able to scale up business. So having achieved that for Spot now and MiCA and Prime, I think it's awesome.
Outside of hedge funds in Europe, because they're mercenaries and will go anywhere looking for opportunity, are we yet seeing European institutions, wealth platforms in the space outside of Switzerland? Because I still don't get much signs that there's been a lot of allocation yet versus the US, which seems to be more vibrant on this side.
That's true. I think you've got your finger on the pulse there. They were slower to form, but I think now they'll come. I mean, particularly with not just today's rally, but with I think Europe's appetite to allocate capital has in part been informed, and I can say this having lived in the UK for 12 years, in part informed by what the US is doing. So when the US is like anti, crypto, which it was for a while, Europe was allocating, but it wasn't massive. Now that, I'm always traveling US, outside the US, UAE, Singapore, London, everywhere. The attitude of rest of the world has been, prior to this administration, was we have a little bit of a head start over the US, and that's kind of fun for us, but they weren't really allocating capital. Now that the US flipped and, the ETFs have ballooned, and I travel abroad again, they look at the actual evidence of U.S. regulation and passing bills and things moving. They're having a case of FOMO and catch up. And how do we keep our markets competitive? How do we keep the U.S. from actually sucking everyone back, to that core market? So I would say the strange but true, the U.S. changed their position has been a catalyst for Europe to actually reawaken.
A stern warning is issued by Raoul Pal. We are headed in the direction of an economic singularity, which is a moment in time when the traditional models of growth, debt, and markets will no longer function properly. He is of the opinion that the window of opportunity is narrow, with only 6 years remaining for individuals to amass fortune before the legacy system starts to fall apart. There is already evidence that the signals are present: the decline in population growth, the stagnation of productivity, the fact that debt is no longer driving expansion but rather recycling itself endlessly within the system. Artificial intelligence and blockchain technology are two growing forces that are gaining pace that cannot be stopped in the face of this breakdown. While the popularity of blockchain technology continues to accelerate along the same exponential curve, artificial intelligence is evolving at a rate that is quicker than governments can regulate. Pal contends that these are not merely inventions. Rather, they are the only two true bull markets that are still in existence. And collectively, they are working to reshape the economy of the entire world at a rate that the conventional system is unable to match. It is a choice that is both simple and pressing. If you wait, you run the risk of being left behind as the old order falls apart and the new one takes control. If you move now, you may ensure your financial survival by positioning yourself in these marketplaces that are undergoing transformation.
Because, if we go back to earlier in our careers, we'd find actually a lot of the innovators were the Scandi pension plans, the Dutch big pension funds. I mean, these guys would swing around size doing all sorts of interesting stuff. They were quite risk takers and innovative, and they feel like they got left behind here somewhat. So I guess they've got to play catch up at some point.
I totally agree with that, and they were always the ones that were the first ones to do the illiquid asset or to earn the extra yield for trading their long-term sort of horizon for a bit of yield in one way or another. What I'm seeing now is actually it's the European asset managers. So I think I've looked at the U.S. asset managers and BlackRock in particular and gone, "Ooh, look what they've done. We need more of that on the shelf here." And as they move towards saying, well, let's have a European asset manager deploy capital, in the space, I think it'll perhaps attract some of that pension fund, that dormant sort of allocation of capital from those players. At least that's my thesis. I'll tell you more next time we do the podcast.
Yeah, the other one that shocked me is last time you and I caught up was at the beginning of our Dubai trip, and then I was shocked because I went to see some of the sovereigns and stuff, and like, okay, this is like there are two mandates in the entire region. One is AI, and the other is crypto. At every scale, from building economies on it to driving licenses to everything, payments to investing in it via the sovereigns. I was like, wow, okay, this is not what I expected, because that was a big shift as well. That kind of happened this year.
Yeah, a couple of years back, we had Abu Dhabi Finance Week. Remember when we had the drone show and it was like the big announcement on crypto, and I thought it was all happening. But then the following year was all AI. And then it was kind of a return of crypto, this year. I got to say, I take my hat off to them, because they're really thinking about and sort of driving innovation, as you said, with driver's licenses and all sorts of different practical use cases in addition to the investment case. I still feel like they're really at the beginning, though. So maybe, I don't know exactly how much has been allocated by those funds, but I feel like they're interested in doing more. I feel like that's where like active management and, maybe some local solutions could really work. Hopefully the Deribit acquisition gives us a lot more trades.
Now, you guys on a US level are, by far and largest, and in Europe as well, but then Binance is out there also trying to build a business. How where do you come across them? Where is that thing? Is that the Middle East, and that's where it starts, where suddenly they start having, a big presence in the market?
I don't really run into them very much in the sort of more narrowly defined part of my institutional job. To be, yes, there's a subset of crypto hedge funds and crypto natives that do a fair amount of trading there. The crossover that I see the most is actually with the clientele that trades on our perp exchange, and probably the clientele that trades on Deribit. And so, yes, we run into them all the time in the Middle East, but in the classic sort of institutional with a capital I, the types of investors that I named in the beginning, I don't run into them very much.
The other thing I was just thinking through, just Deribit keeps going around my head. Another part of the market that you and I grew up with was like structured products with guaranteed return funds and all of that stuff, and having an option, a big option platform with liquidity, you can build a whole lot of interesting things. And again, because I remember the Germans, the Dutch, the Scandis were all buying this stuff, and the Asians would be the other ones. They'd be this vol sellers and doing different stuff. It feels like there's going to be a lot of explosion in that as well.
Yeah, I'm going to have to rehire all my French quants from Polytechnique. They've gone from equity derivatives into crypto somewhere. I'm going to have to reassemble all of them to have the most complex derivative book on the, that no one can mark.
So you can then blow up.
Yeah, sorry, it was cross-gamma. What? But I do see that coming. I mean, I've been an early advocator to do structured products. I mentioned it, earlier, but I just come back to the point that having that full set of products allows us the ability. Now we have a lot of tools to play with to create those custom risk profiles. So I hope it comes. It'll come.
Yeah, it'll all come. It's just a matter of time. As you said, I think we've got the foundations now in place for a further acceleration on what we're going to use this stuff for and how we're going to use it.
It is the contention of Raoul Pal that we are currently entering the agentic era of artificial intelligence, which is a time when robots will not only evaluate data, but will also independently build, launch, and scale businesses based on a single query. Things that used to require teams, funds, and months of execution will now be completed in a matter of minutes through the use of automated resources. There is, however, a catch. AI systems are unable to employ conventional forms of funding. If they walk into a bank, they will not be able to open accounts or wire monies. They will require a native payment layer in order to work, and blockchain technology will serve as that layer. In this new digital economy, cryptocurrency will serve as the system that circulates money. AI creates, and cryptocurrency pays for it. They are working together to rewrite the rules that govern money, commerce, and ownership on a regional and international basis. Pal cautions that the time frame is short. Those who are in agreement with this transformation have the potential to seize wealth and opportunities at unprecedented levels, whilst those who are hesitant run the risk of being ensnared in a legacy system that falls short of expectations. The future is coming quickly, and it won't wait for us to get there.